Let's have another look at shares in HREF, a maker of aerospace components, among other things, specializes in landing gear for aircraft. That's a pretty important part. And it's one of the global players there. Well, it's yet another Canadian tech company being taken off the market. It's going to be sold now to a U.S. private equity firm called Platinum Equity. The price is $32.50 a share. Desjardins says, sure, the price is below our target price of 37, but we're pleased that HREF's value has been recognized and view the price paid as reasonable, given the long-standing Canadian discount versus U.S. players. Now, the Caisse de Dépôt, which owns about 14% of the stock, has apparently supported the transaction and has had talks with the company and the acquirer with regard to the HQ and other operations remaining in Quebec. So that, of course, may soothe or ease investors' worries that Quebec will kick up about this takeover. But it is another company coming off the TSX. Let's get back to that U.S. inflation number. We got a snapshot of the U.S. economy, and it's fueling hope for a Fed rate cut. The Consumer Price Index, the broad measure of costs for goods and services, declined 1% in June from May. So the 12-month inflation rate's now only 3%, around the lowest level in more than 3 years. Our guest says this report was arguably the most encouraging one the Fed has received since it began its inflation fight nearly 2.5 years ago. We're joined by Jay Bryson, chief economist at Wells Fargo. Jay, thanks very much for coming on the show. This gives Mr. Powell and his colleagues a green light to cut, do you think?
Yeah, Andy, I think it does. I mean, the next FOMC meeting is at the end of this month, the end of July. I wouldn't expect them to be cutting at that meeting, but I think it does give them the green light to cut in September. What they're looking for is what they've said is greater confidence that inflation is moving back towards target, and this report today should be moving back towards greater confidence.
It's interesting. We saw Delta today, Delta Airlines. I know you're not a stock analyst, but they talked about fair discounting in the States, excess capacity, and that's a classic example, perhaps, of an overheated economy that is running down. So, of course, it's only one company. This deflationary number on the headline CPI, will that worry the Fed?
A lot of that was due to just falling energy prices, which arguably is, maybe not a bad thing. Yeah, I think what, most economists look at it more, and what the people at the Fed looked at is the so-called core rate of inflation. That excludes food and excludes energy. It's because they're just so volatile. But if you look at that was only up 0.1%. That's the smallest monthly increase we've seen in that measure in almost 3 years as well. So now this is a very encouraging report for not only the Fed, but for the U.S. economy.
And you note that we've also seen signs of softness in the labor market as well, including rising unemployment.
Yes, absolutely. Now, today's initial jobless claims numbers, the people who are filing for unemployment insurance for the first time, that did tick down. But, we've seen the unemployment rate moving up in recent months. And Mr. Powell, in terms of his testimony to Congress this week, also highlighted that we're there's more risk now to the economy, not just because of inflation, but we are starting to see some softening in the labor market. It's not like it's falling apart. We're not seeing payrolls decline, but we are seeing deceleration in terms of job growth there, and we are seeing the unemployment rate start to move a little bit higher.
Is America at risk of going into a recession, 2 quarters of shrinking output?
So, Andy, that's not our base case, but I would say that the probability of that is, maybe elevated. And just to level set here, if you go back to the end of the Second World War to today, the U.S. economy has been in recession roughly 15% of the time. I would say that the probability is maybe a little bit higher, maybe 25 to 30%. Monetary policy is restrictive right now. You are starting to see some signs of financial stress among some sort of households, and so again, it's not our base case. We think the economy will continue to expand, but I certainly wouldn't, rule it out as well.
What about the US dollar? Maybe we can put up a chart for the Bloomberg dollar index. If Mr. Powell starts cutting, it will presumably tend to bring down the US dollar, which has been weakening lately. I guess the paradox is that that'll tend to increase your inflation because your imports will cost more. But is that a marginal effect?
Yeah, and that's a marginal effect. I mean, unlike Canada, the United States, in terms of like imports and exports, it's still a relatively small sort of percentage of the overall economy here. And so, yeah, on the margin, a falling dollar, particularly if it falls really quickly, would tend to push up the inflation rate. But again, it's on the margin. And so we wouldn't look for a surge of inflation because of a falling dollar.
I know we stray into politics at our peril, but you think it's possible, even probable, the Fed will cut in September. Would Mr. Powell be wary, though, of getting accusations from the Republican side? Oh, well, he's trying to prop up the Democrats.
Yeah, I mean, that certainly is a possibility. The problem is the next FOMC meeting is 2 days after the U.S. election. And so if they wait then he's going to get pushback from the other side saying, they did that for political reasons. It's interesting when you go back and you look at the historical record. If you look at the actual word-by-word transcripts of the FOMC meetings that are held in September before a presidential election year, you can go through that entire document and you don't see any reference at all to election. So, the point here is that the Federal Reserve largely ignores political sort of considerations. The Fed, at the end of the day, will do what they think needs to be done. And if the data is indicating on September 18th that the Fed should be cutting rates, they will be cutting rates.